Okay, beautiful. Welcome everybody. This is Dollars for Lunch. We are jumping into our NFP session together. This is going to be big. This is going to be massive. Just a massive welcome to everybody that has joined us live in this broadcast. Let me know where in the world you are joining us from, where you're watching from. Are you at home? What city? What country? So we can give you a quick shout out and share the love. In addition to that, if you're brand new to the channel, meaning you are here for the very first time, please go put your hand up so we can greet you and welcome you in the Globex 360 way. So guys, we are going to have a massive session today. It is definitely a Red Bull watermelon type of day, as well as a coconut berry type of day. We're going to have a massive session. Remember, NFP is hugely volatile. We're going to look at different instruments, what we can be trading, what advantages we can take. If you're with me as part of the advanced setup, we've already set up some orders. And if you want to be part of those sessions, you just need to make sure you've got your Globex 360 live account funded and ready to take advantage of some of those sessions. Again, we offer a ton of value and it's just absolutely free to those of you who have your live accounts at different value propositions. So just a massive shout out. If you're brand new, just put your hand up, let us know there. I can see Pepsi, Tabisi, Passion, Clinton is brand new. It seems like brand new to the show. So just a massive Globex 360 warm welcome to every single one of you. Now, quickly, as we jump into it, I'm just going to see where everybody is joining us from. I can see we've got Polokwane, South Africa, Zambia in the house, Josie right here with us, KZN, South Africa, first time. Beautiful, hands up in the air, massive welcome to every single one of you. Now, Cape Town's in the house as well. Beautiful stuff. Pretoria, Cape Town, people still putting in their chats there. Okay, so you guys are welcome to go mad on the chats. Keep the energy up. Welcome, welcome to the family. Thank you for subscribing. Go ahead and do me a favor, guys. Go and smash that like button. If you haven't yet already subscribed, go and hit that subscribe button, because today the goal is to make it rain, right? We want to see massive profits in the market. Again, NFP is hugely volatile, but if we play our cards right and we get this done correctly, we are going to result in a really amazing day. Now, the week already has been a monster week for us. If you're with us trading the Federal Reserve interest rate decision, we smacked over 10,000 pips on that day alone between those different sessions. And we certainly ended the month of October super strong. We're starting November with an all-time record. So again, we want to keep that momentum and keep it strong. Jay just subscribed. Welcome, Jay, to the channel. Beautiful. I can see Limpopo, Namibia, Cape Town in the house, and someone's ready to book their ticket to Cape Town. Beautiful. Free State, welcome. Namibia's in the house. KZN, Limpopo, Germiston, Durban. Let's go. Okay, beautiful. So a few things we need to obviously discuss and talk about prior to the actual NFP data coming out in the next couple minutes, the next 13 minutes and a few seconds from now. 23 minutes and a few seconds from now, is that you need to remember there's an extremely volatile event, right? Normally, NFPs are volatile, but looking at where the state of the economy is, and we're speaking specifically about the US economy, with that Federal Reserve interest rate decision and where we are now, this NFP is extremely important. It basically is one of the highest levels that the US economy looks at to understand where the economy is going. Now, around the world, inflation is being fought through different financial mechanisms, and in most cases these are interest rate increases to try and bring that economy, that surging growth, those rising prices back in order and into control. Now, the Federal Reserve's goal at this moment in time is to slow down the economy, meaning they do want to see unemployment rise. Listen to what I'm saying. They do want to see that unemployment rates rise. They do want to see less jobs being filled and bring the labor market back into correction, right? So that is the expectation. Now, there's a couple data points we're going to look at. We're mostly going to focus on the unemployment rate in the US, as well as how many new jobs have been created. We're going to get that data at exactly 2:30, and we obviously need to prepare ourselves accordingly. Now, I've already taken through Globex 360 live account clients with more than $250 with my personal setup, the pending orders that I'm setting up. And, you know, you are going to be able to see that. You're going to be able to participate in that. But remember, this is for educational entertainment purposes only. This is by no means financial advice. And what I do in this broadcast is merely me trading, and your choosing to follow that needs to be under your own decision, your own control, right? More than that, and even more importantly than that, is risk management in these sessions. Please, guys, don't enter a trade without a stop loss. I promise you can get lucky once or twice, but the markets will humble you if you're not trading without a stop loss. I can promise you, I can assure you that will be the case. Okay, so just a massive then shout out to Globex 360 for making these shows and these opportunities possible to every single person that wants to join. It's massive. We're changing the face of trading within Africa, eventually the whole world, and we're growing a trading community. So if you're watching right now, you don't have your Globex 360 live account, go ahead and sign up to one of the longest established, proudly South African regulated brokers in the country. And I can promise you this is just the start of the value and the benefit that you can receive by being with the top broker in the country. The link is down in the description below. Open up your account, get it sorted. We have an amazing team that will support you along that process, whether it's uploads, deposits, withdrawals, whatever the case may be. But anyway, if you want to be part of that, hit that down below. If you want to chat with me directly, my Telegram link is in the description, as well as a link to our Telegram group, which is where you want to be if you want to get any updates on future programs, right? Yeah. 100%. So Akil saying trade what you're willing to lose. NFP will play games. Too much news in the markets. So yeah, in terms of risking money in the markets, never risk money that you are not prepared to lose, right? And again, that's why so many people do so well in a demo account, because you're not phased, right? You can place a trade, walk away. You're not emotionally tied to that. The second a person enters into a real or live account environment, they start to second guess themselves quite a bit, right? And it's a psychological thing, but also from a risk perspective, right? You don't want to put money in the markets that you are not prepared to lose and or prepared to learn from. Again, risk management is something that takes time to understand and evolve. Beautiful. Amazing stuff. I can see all of our MVTs, most valued traders. If you guys are sitting with us and have been with us in the previous sessions, please put your hand up and let us know that you are part of our MVT program. You guys are absolutely amazing. FX Sniper saying, what's your NFP prediction? So remember, our job is not to predict the market. Our job is to have a look at all the past data and be in a position to execute based on what the markets end up giving us, right? Traders who try to predict the markets are traders that sit on Instagram and sell you signals. Our job is not to sell you this idea that if you start trading, you can buy a Lamborghini in a month. It's possible, it's doable, but that's not the goal. That's not the idea. We're not gurus. We're not trying to rub a ball and predict a market. We can be wrong. The point is putting in the work, putting in the data, and then being prepared for a move that you are able to capitalize on that move. Now, I do have a feeling of where markets will end up going, but we want to prepare for all eventual outcomes. So let's move over into the data and let's have a look at some of the fundamentals of what is going to be happening today so we can prepare ourselves accordingly based on what we end up seeing. So let's have a look at that fundamental data. We are going to switch over. Let's go through what the data says and what we could end up seeing from that. Dwayne has subscribed. Welcome, Dwayne, to the channel. Beautiful stuff. So we are going to be focusing on two sets of numbers here, right? Now, you are going to see a bunch of other things. You're going to see average hourly earnings. You're going to see a bunch of other data. But the two numbers that really drive the market and are most important today is going to be two, right? Firstly, being that unemployment rate on the dollar. The second being non-farm payrolls and the number of new jobs that are created, right? There is an expectation for that number to be reduced. We can see 263,000 new jobs were created for the last month. And remember, we're working on past data. So we get this data the first Friday of every month, but this is based on October's data, right? The number that we got out for September in October was 263. Economists and people who do the forecasting of data predict that we should see a number around the 200,000 mark, right? From an unemployment rate perspective, right? The October data says that there's a 3.5% unemployment rate. There's an expectation for today to come out at 3.6%. Now, again, as I've discussed with the advanced trading session and advanced setup, these numbers in normal circumstances would be volatile, but understanding where the Federal Reserve is aiming, should we get a number, right, that disappoints, meaning a higher than expected unemployment rate, a lower than expected non-farm payroll perspective, that is negative on the dollar, that will cause the dollar to fall. It will cause dollar-based currencies to essentially fall, right? And dollar quote currencies to rise. So if we look at gold, gold is XAUUSD. The dollar is the quote currency. And in that particular case, a weaker dollar will cause gold to buy. It will cause indices to buy, commodities to buy. So again, an outcome in which the dollar comes out negative on this Nfp data, we will start to look for long positions on indices. Now, you can choose what it is that you want to trade. For me, in this particular case, I'm looking at trading US 30 for the reason being that US 30 is heavily oversold, right? The Federal Reserve interest rate decision, we sold US 30. It ran for about 10,000 pips towards the downside in a single direction. We bought it, caught the buy. We also caught the sell in that session, but it's massively oversold. Again, that stems from Powell's interest rate announcement, which was generally observed as positive through the markets. But his comments, his forward guidance was that he's extremely hawkish, right? He's going to continue to steer the course and do whatever it takes to bring the US economy back into control, right? That is what scared the markets, and the markets thought that new and high interest rate increases are coming. Now, should we get a number that disappoints, when I say disappoints, meaning a higher than expected unemployment rate and a lower than expected amount of new jobs created, that is in line with Powell's forecast, right? If you look at a price action from a price action perspective, that is what the markets are looking for to get a balance back on the stock market and on Wall Street. Hugely undersold on US 30. So a negative dollar would fuel a monster rally on indices, right? A positive dollar will cause a continued sell-off on indices in line with fear that Powell now has more data, right? Data that he doesn't want to then further incentivize those interest rate increases. So it's not as simple as predict, is it going up or down? There's a lot more involved. And I'll often see people who predict buys and sells on these things generally don't understand the market. They're simply sucking their thumbs, putting it in there and saying, we think it's going to do this or that, right? It's important to understand the bigger perspective and what is happening in the world and how does these numbers play into the markets and the understanding and the mindset of the market, right? Because remember, as I discussed in the past few days, markets are not pricing in today's data, they're pricing in how does today's data affect tomorrow. These numbers that we're seeing, these forecasts, these estimated numbers we're expecting to get in today, the markets have priced that in. What the markets have not priced in is a deviation of this number, right? This is where we use standard deviation, a percentage higher or lower, and that's more technical, and we'll save that for more of the advanced sessions. But what we need to know for today is that if we see unemployment rates, right, higher than that 3.7% or 3.6 higher, so 3.7, 3.8, bad for the dollar. If we see private non-farm payrolls, right, and payrolls come in under that 200,000 number, right, that is going to be negative for the dollar. That will fuel a rally on indices. It'll fuel a rally on gold, and it would be something like USD ZAR would sell off. So it'll be a weaker dollar, and we'll see positive everywhere else. Inversely, right, if we see a bigger than expected number, we see 220,000 new positions created here, and we see unemployment rate below the 3.6%, 3.5, 3.4, that's going to be good for the dollar. It will cause a massive sell-off on indices. We'll see a continuation of those sells. Things like gold will continue selling, USD ZAR will continue buying, right? That's one of the two outcomes. The third outcome is that we get a mixed bag, mixed result. Now, if you go back and have a look at the 2nd of September, I believe it is, we had a better than expected, and a worse than expected employment rate data on the dollar, but we had a massively good non-farm payrolls data point there. And that caused that whipsaw, right? And this is the big worry about these particular markets, is that you get caught into a whipsaw where markets shoot up and shoot down very, very quickly, causing you to take a buy, it gets knocked off, you take a sell, and it goes back into a buy, right? That's what we set up in the previous session, is looking at the range of those whipsaws and how do we guard ourselves against indecision in the market, because these data points can very often come out conflicting, one being positive, one being negative, and we need to know which one is more positive or more negative, and then we will take a position based on that. So looking at the markets, we are going to move now into our live trading session, and I'm going to be switching over to US 30, and I just want to show you guys a little bit of market structure that we're currently working on, and we will have a look at the different outcomes in terms of what we can do to benefit from these structures. So again, understanding just the bigger picture in terms of what has happened. Here is Powell's Federal Reserve interest rate decision. We caught the buy, we caught that massive sell-off that then resulted in a 12,000 pip to its absolute bottom. I'm still holding a sell over here from that particular session, right? What we've done in our advanced session is we've set up already pending orders with trailing stops north and south of price. So just before the NFP numbers get released, we will drag those pending orders closer to current market price and then allow those orders to be activated in the direction that markets end up running. So if we see a break in structure, right, we will then drag our sell stops, which are sell orders, closer to price, and they've already been pre-configured with trailing stops at different levels so that when markets run, it will literally drag our orders into profit as markets then go, right? So that's the order setup, but all we're looking for is a break in structure, and we obviously also have a good amount of support below us. So in order of perimeters, right, I would say anywhere between this area is a dead man zone, right? This is currently looking at, again, US 30 on a 5-minute time frame. Anywhere between these two zones is dead man, right? We could see a whipsaw in this range, and you don't want to get activated in this range. We're looking for a buy or a sell outside of these two ranges. So if you want to do a quick setup, you have a few minutes left, potentially in the region of about 10 minutes and 8 seconds left. If you want to set up pending orders, set them up fairly high and below, above market price. We're using stop orders, so those are buy stops. And should they get activated, or should markets open, we read the numbers. This is the order of which how things are going to happen. So we have our orders ready. We're going to see the data come out. If the data confirms the direction, we will then manually enter and then allow pending orders to be activated in addition to that. But if we get conflicting data, and this is also something you need to know, is when NFP opens up, when that 230 mark hits, you don't always get all the information at once, right? You may get a lag or delay in information. So we might see unemployment first. It might be positive, right? It might come out better than expected, and that would be good for the dollar. And we're all thinking we're going to sell on US 30, or we're going to sell on indices and sell on gold. But then actual payrolls come out and they're bad. They're less than that 200,000 mark. That is what causes whipsaws. So we want to avoid that by getting all the data in first, having our orders set up, and then being in a position to then capitalize. And the other outcome is that all these items come out exactly as expected. In that particular event, we're not going to see a bunch of movement. We'll see a little bit of volume in the market because, as with us and a lot of the rest of the world, everyone's watching these numbers and will be placing orders in based on these orders. So in essence, right, there's a bunch of different outcomes. A prediction is foolish. We are simply looking at observing the data based on past data to prep ourselves for a move. The most volatile outcome would be a negative dollar result, meaning unemployment higher than expected and NFP non-farm payrolls lower than that 200,000. That would cause a massive spike on indices towards the top side. That would be in line with the correction from the Federal Reserve bear market, and that is where we have the most potential for a big rally. If we see a stronger dollar, we will see an immediate shift towards the downside in indices, and we're obviously going to play that as and how we get it, right? So let's read some of the questions here. Can someone please send the pending orders in the chat? Justin, so the pending orders, right, are set up north and south of current position, meaning their levels are not yet locked in. We're going to drag those orders as price comes closer to being open, right? We studied the market moves, and it's about 1,000 pips you need to account for, and we did the risk management on 1,000 pips at 0.10 is a cent per pip. And if market's going to move 1,000 pips or 10,000 points, that can result in $10 from a stop loss perspective, right? So we've been through all of that in our advanced sessions. If you want to get part of those sessions, those prep sessions before these volatile events, you want to make sure you've got at least $250 in your live account to access those premium plus sessions. That's what it's all about. Someone can pop the levels in the chat. The reality is we're going to drag those levels. We've set up all of these orders with pending orders as well as trailing stops. So if anybody wants to pop that in the chat, you're more than welcome, but it's not going to add or serve much purpose without the understanding of the market structure. If you see green and red, Sherman's saying if you see green and red, expect whipsaw. That's pretty accurate, right? So I'm not going to argue with you there. Keenan saying, are we going for a sell on US 30? It's very likely we're going to see a stronger dollar, right? The dollar is just absolutely thumping, right? Nothing that the US Federal Reserve is putting in place is actually helping, right? There was an article that said over the past 6 months, all of their efforts have resulted in an almost unnoticeable change in inflation. And all they're doing is tightening up the US economy, making it harder and harder for the average person on the street. So US economy is a machine, guys. Like they just are absolutely on fire. So yeah, we pretty much going to deal with that. Tim Biso says on NAS, what you'll say, same thing. NAS is an indice, right? So when I quote a market structure, or I generally quote a group and indices, NAS forms part of US 30, forms part of S&P 500, German 30, so on and so forth. I see a buy on US 30 and NASDAQ. Only Limpopian. I hope so. To be honest, that's my ideal outcome. Right, is a weaker dollar, missing expectations. I will be happy because it means that he's actually doing something, or that all these economic policies and all these meetings are for something. Graham's saying expecting a GPUSD sell, so that would mean a stronger dollar, and it's very likely. Right, that's the big thing about these NFP sessions, is that markets can pretty much go any direction. And it's about essentially setting up for that. So to me, saying a signal, to me, you need to go pay one of those Instagram gurus $200. They will guess the direction of the market. They'll give you a signal. Yeah, we actually trade. This is what real traders do. Real traders don't send signals. Just FYI, in case you don't know. Sorry, that was a bit harsh. Anyway, no. So again, oh man, yeah, that's life, right? Coconut Red Bull, everybody. The truth is the truth. Sometimes it hurts, but somebody has to say it. I don't mind saying it. Absolutely. Yeah, 100% lucky. So I'm going to trade manually and pending orders. So Camilla saying emotional damage. Yeah, I'm going to trade as the data comes out. So the purpose of this is basically I'm trading NFP and we're doing it together, right? So as the data comes out, I'll read it, I'll take positions. I'm risking about, my total risk on all these trades in either direction is about 80 grand, right? 80,000 South African. But the reward, the potential move that can happen is we've seen previous NFPs can do a 9,000 pip rally, right? My risk at the moment is 1,000 pips per trade. So it means I'm in for about 3,000 pips. But the reward is a potential 9,000 pip rally. Again, with pending orders, it doesn't always work out that you get that absolute range of the markets, because again, pending order will take you out should markets pull back. But yes, the potential reward is there. We can see a potential 9 to 10,000 across 3 different trades. So I'm going to drag my pending orders in close to the time. I will add manual trades should that be the case. The only reason I'm keeping my pending orders away from price at this moment in time, and I'll maybe make my face a little bit smaller, and you guys can then just go ahead and see what's happening a little bit closer, is again, in the event we get false positives from a data perspective, right? So markets look like they want to trend down here. We need to just take into account as well that the start of the US session was at 2. The start from the US session is definitely a little bit of a bear push. We just need to see that over the last 20-30 minutes we've had that bear push, and it's very, very likely the US can come out with positive data. Now, the reason I'm not entering a sell immediately based on the probability of a good NFP as we saw last month was the reason that I've really got to sell higher way over here with that Federal Reserve interest rate decision, right? So my sell is already sitting 6,000 pips in profit. We traded that one live and we were together on that one. So we're seeing an initial push to the downside. Okay, so we're seeing that initial push to the downside. And again, it's not to say that the market knows that that's where the market's going to go, but we're seeing a little bit of that fear from the stock market at this moment in time, with the guess that they are worried about a positive NFP. Please also bear in mind, we've got 2 structural supports running through price at this moment in time, right? The first one being this level over here that price is using at this moment in time to keep itself into balance, right? So we've got 2 supports below us. We need to break support right to the downside or break resistance to the top side before considering anything here from a trade position and or perspective. So what I'm going to do is I'm maybe just going to take this window and I'm just going to make it smaller, and I'm just literally going to try and get it on screen that we don't lose all the data. and try and do something like that. Just want to get that bit of data into the screen. Okay, let's see if I can do this. Let me maybe give you guys yeah, it's still not very clean, but it'll have to do for now. It means we can kind of keep this on screen, I hope, while our session runs together. Let's see if I got this right. Okay, there we go. Let's go ahead and do that screen share really quickly. Okay, so I'm tightening up some of my orders here, and I'm just tightening up one of these orders, right? So I'm just tightening up one order, keeping my two other cells away from price at this moment. And we're going to see what that data says and how that data comes out. So let me know what you guys are thinking. What do you guys think that's going to happen here? And we might have to refresh the screen. I might need to make it large and relook at that. But remember, we are in a bigger sell from that Federal Reserve interest rate decision. From a buy perspective, right, if we get that weaker data, then we will then look at capitalizing from that perspective. Okay, so we are in those cells. Let's see if the data has come through. Let's quickly have a look. Okay, so unemployment rate is slightly higher, but non-farm payrolls is extremely positive. So we got a 50-50 here. I'm just hoping we don't end up getting any sort of whipsaw here. Let's have a look here. So yeah, we're going to get a lot of turbulence in this market. So let's have a look here. Unemployment rate is higher, but that is good for the markets. But the data is generally, from a employment rate perspective, it is positive, right? So none of our buys have been activated. We might get some sells activated, and I'm going to literally just put my buys above price, so that if markets rally, we can also catch some of those buys. We've got that bigger sell at place here. We've got a nice little spike down, and I'm literally just placing my buys in the range of this market that should want to then set up, that we obviously have that set up. So let's see what ends up happening here. But again, this is way bigger than 1,000 pips, right? There was a 2,700 pip spike there, right? So depending where your orders got activated, from a pending order perspective, your trailing stops may have kicked in there already, and you would have been in a position that that would have already moved into profit and closed out automatically. So let's see there. So unemployment is higher than expected. A significant little jump there. Let's just open that up a little bit. So 3.7%, right? So again, I was hoping for both of them to both be negative. That would have been the ideal situation. Private payrolls good, non-farm payrolls good. Unemployment rate is bad, right, by 0.1%. Again, it's better for the Fed in terms of that average hourly earnings. Average, let's see if there's anything else we've got here. Average hourly earnings also good. So pretty much it's good across the board, right? The only thing that is in line is that 3.7%, but we do know the Federal Reserve has a goal of getting the unemployment rate as a total to that 4.4% overall across the board on the US market. So let's see, if markets don't fully absorb this info, right, as good, then we may very well end up seeing that will be short-lived, and the market might start to buy off of that momentum, right? So I'm keeping my pending orders just above market structure, because this may just be a retest, and we're just going to see what that ends up doing there. I just want to see quickly how quickly those orders activate, and if anybody's pendings closed in profit. Oh, that's amazing. That is absolutely amazing. So guys, depending where your orders were, I made $4,500 off of those pending orders activating with the trailing and then closing. That is absolutely amazing. Let's quickly go in here and see what time. There we go. So there's those 3 orders right there. Okay, let me show you guys right there. So there are those 3 trades there. We can see that they got stopped out, right? But they got stopped out at $1,300, $800, and $2,000 as a whole, right? So, you know, 3,300, so around about $4,000, even with a spike. And I'm really, really impressed about that, because in most cases, those pending orders don't always activate as quickly, right? So I'm really, really impressed with Globex's back office team system, because that was super quick, massive spike there. There we go. Joseph saying you made some sell on some trades. Let's just see there. Yeah, this positive is bad on indices. The problem is we have to weigh up now. Does the market believe? And again, this is where we allow trend and markets to lead here. Does the market have more of a weight on that 3.7%, right? That 1% gain, or on that 261,000 new jobs being created? That is a pretty big standard deviation, right? That is around about 30% higher than expected, where 3.6 to 3.7 is a tiny percentage from a standard deviation perspective. So from a surprise perspective, that's why we got the spike, is that 30% more jobs were created than what economists expected. So that's what gave that initial spike. But we now need to see, does the market's value new jobs being created over unemployment rates? That's the big question that we need to understand, and we need to obviously fully understand. Okay, let's just double check if my against 3, 1 could be 3 against 1. Could the 3.7 pull through? Yeah, I don't think the 3.7 unemployment rate is enough at this point in time, right? Indices are extremely weak. Again, the data that Powell has to deal with at this moment in time far outweighs all those different data points, far outweigh, and speaks exactly to what he said in that Federal Reserve interest rate meeting, right? Is that, you know, these numbers that they're seeing do not support a economy that is shrinking, right? That was his whole argument. Where's our chat box gone? There we go. We just made profit, sell, any buyers, go kick in now. Yeah, so I've reached my target on some of those sells. I'm just double checking if it's my internet connection on the platform or what's going on. Is my system. Okay, so I'm already in buys. Okay, let's see there. Right, so I think my buy orders are activated. There we go. So buy orders activated. Markets are taking those buys from us. There we go. And we are in a good amount of profit there. You just want to manage your stop losses accordingly. Okay, so I'm going to utilize, maybe here, I'm just going to zoom in. I'm going to utilize, let's see, type of. Yeah, that's fair. Okay, so I'm currently running at this point in time 600-700 pips in profit here. Let's just have a look. Okay, my bigger sell from that market has closed up now. Okay, I'm putting the balance of that trade in break even. And I don't know which trade this one is. Is that my bigger trade? Let me just double check. Oh, okay, that's a buy stop that has not activated. So I'm just putting my buy stop there. So we did get that whipsaw in the market. And this is, again, the market's trying to figure out if this is a balance thing now, yes or no. So I've moved those buys a little bit closer. My buys at break even, just over break even now. I don't have my buy entry and my stop loss are pretty much at break even now. So there's my buy over there and my stop loss is at entry. And if this thing wants to whipsaw and go sideways, I don't want to hold that, right? I simply want to wait for what this market wants to show us. So there's about a 4,000 pip range that we're seeing there, 3,900 plus. But it seems positive or negative on the dollar. Let's quickly give a US dollar index a quick look here. Okay, US dollar index is taking this negatively. We could then start to see that rally. So let's see. We need to break through this area of resistance, right, to have this rally continue. So I'm pretty much going to just position my pinning order outside of this zone, and I'm pretty much just going to watch out that from a wick perspective that I clear all of these wicks here. So that will be in line with that. So I only want to activate that buy should we go into that zone, but we're getting a lot of indecision. Let's have a look on a minute time frame. Yeah, we're getting that indecision right there. So markets need to decide now where they want to go. We've cleared out all that bottom range, all that top range, and now we're seeing that indecision. So if I close out now, if that buy closes, so there that buy is closed, my buys and sells are closed, made some profits. Let's have a look here quickly. There we go. Yeah, made some profits, closed some of them at break even, and yeah, not too bad. However, there is no range here, right? We have no market direction. Our previous NFP that we had was a straight runner, a straight direction. We got numbers that correlated, we got numbers that were confirmed in the same direction, and that is what markets want to avoid, right? If we saw that whipsaw to the downside and someone is in that sell, right, and they don't close quick enough, that sell could turn into a negative, move to the top, they could get into a buy, the buy could turn into a negative. And that is why trailing stop is super, super important for these sessions. Yeah, so Laluma saying US economy added stronger than expected, 261,000 jobs in October, above that forecast of 200,000, wealthiest reading, although it's the weakest reading since December 2020. Yeah. So overall, if we lose this weakness now, right? So this is what I would end up doing with this data is, should we go past NFP opening, right? And that's going to read at 32,115. I will get in a long-term sell here, right? Again, whatever we do now after this NFP reading has come into play, right, will determine that next direction. I just want to point your attention to the previous NFPs and the previous data that we received. Let's move to that chart there, right? On a 30-minute, maybe we can do an hourly time frame. That should suffice. Let's quickly zoom out. Okay. So I just want to point this out to you. This was our NFP trade from last month, right? Massive sell, direction was confirmed and ran 11,000 pips. There was no pullback, there's no indecision. But if we have a look at one that had a little bit of indecision, that was on the 2nd, right? We had a bit of indecision. Markets rallied until 6-7 that evening, right? And then a massive, massive, massive sell-off, right? That was on the 2nd of September. And if we go to the previous month, having a look at that first week in August, right, we can see that first week in August, we got that initial sell-off, and then it didn't take very long. By 4 o'clock, right, by 4:30, markets already started, apologies, by 3:30, New York Stock Exchange open. Markets then changed direction and rallied in the opposite direction. That set the tone for the rest of the day, for the rest of the Monday, for the rest of the Tuesday. So what we want to understand in this particular session is, where do markets want to go? What tone does markets want to set for the balance of this day? Look at this insane candle, right? 4,000 pip candle just on its own. Okay, so should we break this zone here? Let's see, this 32.08 something. Again, that would be indicates that weakness on US 30. So I'm going to pop in a sell, and I'm going to use a slightly bigger stop loss here. I need to run it probably about 1,500 pips, somewhere around about there. And I'm just literally going to hold that sell. As long as this is ranging, right, I don't want to be caught out into the top or the bottom of a range, but I do think the markets are showing that there is strength on the dollar, and indices are taking a big hit from this, right? I think the world is arguing at this point that unemployment rates need to rise in the US. However, that very, very strong jobs report data is obviously getting smacked quite hard across the board, right? So I'm, in this particular case, just going to be holding one sell, and I'm literally going to position my stop loss above the spikes of NFP. Now, what we're going to end up doing for today as well is we will potentially wait to the New York Stock Exchange open. Remember, the New York Stock Exchange open, once that opens, that is going to be where the tone is set for the New York Stock Exchange for the day, right? So if the New York Stock Exchange opens lower and we see that move towards the downside, we are going to see a very, very, very big move. That could be a continuation of that sell. So we don't have any trend at this moment in time. Big whipsaw. If your pending orders caught some buys, if your pending orders caught some sells, and you had a trailing stop in there, then you should be exiting this day with profit. If you were looking for a signal, right, and you saw some guy on Instagram saying sell NFP, you'd be crying right now. If you saw a signal, someone saying buy NFP, you would also probably have a blown account in that particular case. So again, I'm glad that it proves our point is that it's about understanding the markets, preparing for eventualities, and a whipsaw is one of the things we did consider as a potential for today. And that is why we obviously want to make sure we trade around those issues. Yeah, absolutely. Chris H. So remember, the markets can remain out of balance for a lot longer than people can be sane, right? So even though, and I think there's also a problem that a lot of traders have is, when you believe something is too low, it has to recover, right? If I look back in my trading journals, that's the times I've made the most mistakes, believing that something cannot fall further, and I promise you it can. So in this particular case, it's really going to be for the market, specifically Wall Street, to decide, how scared are they of this data, right? Is this positive US data enough to scare them off into further sells? Or is that a little bit of a high unemployment rate showing weakness or crack in the armor of this extremely strong dollar? That's what we need to allow the banks to decide and then pick their direction. Remember, as always, our goal is not to think we're trading against the market. You want to align yourself to trade with the market, with the big banks, with the big liquidity providers. They're the ones who set the tone. They're moving billions of dollars in and out of the markets, and we're simply we're tagging along, right? We're not deciding that. If all of us, if we had, all of Globex's clients at once, if we had, 200,000-300,000 people selling the same thing at the same time, full account size, we wouldn't even make a blip on the markets, right? Big banks are moving billions at a time. That is where obviously the big money sits. Okay, cool. So in essence, what we're going to do is we are going to wait for the New York Stock Exchange open. That is going to happen at 3:30. And so what we're going to end up doing is we're going to take an intermission. We're going to take a 30-minute break, and we will then look at the New York Stock Exchange open. We will be live again at 3:15, and at the 3:15 mark, we will then look at what is the position the New York Stock Exchange wants to take, and then we will end up going for the markets in terms of where the New York Stock Exchange wants to go. So we're going to do that. We're going to do a quick 30-minute intermission, and then ideally, that's not how I like to trade NFP. I like to be in a position, hold that position. If it's a one-way train, we run at that position, we hold it, but I do want to see what example the New York Stock Exchange opens. That could be the key to understanding the tone and the direction for indices this afternoon. We will, once we get back online or after the intermission, we will look at gold, we'll look at commodities, we'll look at a few other instruments to try and see, are there some clues as to the condition of the health and the state of the markets? Because we often see that gold, some other commodities, indices drop these little nuggets on where they think markets are going to go. So we will rely on them for a little bit more data. So we're going to do a 30 minutes. I will see you guys a little bit in a bit. Yeah, absolutely. What's the direction at? Can I have a... What's someone saying direction at 3:30? Oh, I don't know. Okay. In any event, yes. So New York Stock Exchange is opening up at 3:30. We will be live again in 30 minutes from now, 3:15. We'll look at that New York Stock Exchange direction, and then we'll rally with that, as we generally do with all the dollars for lunch sessions. So let's use that play. Let's see if we can end the day super strong. I'm pretty happy with my pending orders, net positive for the afternoon, but I do believe there's still more in it from the market's perspective. There's still more that we can extract out of the session. So we're going to do a 30-minute intermission. I'll see you guys in a bit, and then we'll look at taking more advantage of the market. So I'll see you guys in a bit. Get some coffee, move those legs, get a Red Bull, whatever. See you guys in a bit. Okay, guys, so we're going to jump back into a little bit earlier than expected. I just don't want to see, this market break out before NS New York Stock Exchange, right? We have seen in the past when a market is pretty determined to move before New York Stock Exchange, there generally is a bigger feeling in terms of what's happened. So what I did in the break is I had a look at the past data. I am in a buy already, right? So I'm just stating that, right? My pending orders were already activated. I'm in that current buy. Pending orders already activated towards the top side. But I just want to state that if we have a look at some past data, and I've just looked for another example of where we've seen a similar type of a release, right? Where the actual number beats the previous number by 0.2%, right? That is the 2nd of September. If we go to the 2nd of September, just really quickly on the US 30, I think this is the chart we did some of our previous analysis on. I just want to go to that 2nd of September. Right, so 2nd of September, similar type of result, right? I just want to point out the fact that, right, markets rallied, right? Dollar lost value, US 30 rallied on for quite a few hours, right? For about 4 to, let's just see how many hours here, until about 6, 7 p.m. in the evening on that unemployment rate being lower or higher, sorry, than expected, right? Weaker dollar. But then we do see a massive turnaround in markets and massive push in the direction that they were wanting to go on. So I just want to point out the fact that the higher than expected unemployment rate had a bigger impact on the markets, and then we see that turnaround happen 4 hours later. Also on the 2nd of September, we did get higher than expected NFP data, right? So very similar type of event to today. And that has obviously got me fairly cautious. I can see the rally kicked in only once the New York Stock Exchange opened, right? So I just want to point that out. There's quite a bit of volatility on the New York Stock Exchange when we got those conflicting data points, right? There is evidence of a whipsaw here. I don't know if we can go down to 15 minutes, if we'll have the chart data to support that 15 minutes. There we go. So we can see the data came out, right, at that 230 mark right there. Continued that rally, and on New York Stock Exchange, got a massive pullback, right? So when I say massive, 2,000 pips or 20,000 points. Let's just see here. Yeah, 20,000 points. And then over the balance of the New York Stock Exchange open, another rally of about 3,000 pips. So I just want to point that out to you, right? We are now pushing up. The market is at this point in time outweighing those new job positions in favor of that higher than expected unemployment data rate. So dollar is currently taking a massive knock across the board. It was unclear, right, on that open whether that was the negative, but we can clearly see on the dollar index the dollar is taking an absolute beating. Euro USD, nice pump to the top side. This is the result we ultimately were looking for, except it would have been great if we didn't get the conflicting data. We just got a one-way steam train toward the top side. Now imagine if we actually got, right, those new jobs created at expectation or under expectation. You can just see how big of an explosion to the top side there would have been, but obviously getting those conflicting data points, that 3.7 made the difference, right? Chris H is right. Markets at this point in time are taking favor or putting preference on that higher than expected unemployment rate, and they're saying that's more important. And again, that's the importance of listening to the markets and allowing price action to lead in this particular case. Now, if this was your first time trading and you used an NFP to jump into the market, right, there's a lot of people that would have got hurt by that move without following risk management, pending orders with trailing stops. Everybody that had trailing stops that activated would have closed out in profit. And again, it's also based on your internet connection, right? So if you're on a mobile connection, if you're setting up and you're hotspotting to yourself specifically over high impact, high volatility events, you do want to be plugged into the internet on a stable connection with low latency, right? Please just also remember that, because it's your MetaTrader terminal that is engaging those stop losses. It's your MetaTrader terminal that's seeing price go past your entry and activating and sending the server a request and a message to say, hey, I'm activated. Please also remember I have a trailing stop behind me. So if your internet connection, if your latency is anything over 200 milliseconds on mobile connections, right, that can be even higher. You can see latencies of 3, 4, 5, 800 milliseconds. Remember, that's almost a whole second, right, that passes. And if we saw the speed of that whipsaw, that thing happened, I don't know, I'll go back into the data, I'll go into the tick data, but I'm pretty sure that all happened in the space of a second or so. So yeah. Morotti's asking, what are trailing stops? Essentially, a trailing stop is you telling your system that, hey, when you move in price, let's say you're buying the market, as the market moves, it'll bring your stop loss with you. So if you're entering at this level and markets move up, your stop loss would have been below that. As markets move past your entry, it will pull your stop loss with you, and meaning your stop loss is in profit. So meaning even if the markets return, it will close that trade at a profit, not at a loss, provided that pending order and that stop loss goes past your entry point. So that's the method we use for high volatility events, because again, if markets push really quickly, as a human, it takes at least 2-3 seconds to realize it, move your stop loss, or even close or exit that trade. So trailing stops definitely the way to go with high impact news. Yeah. So let's see. Markets are stalling out here, which is a good thing. I would have been really worried if it just continued rallying. We're starting to get a little bit of a smaller market structure here. This might give us aid in trading the New York Stock Exchange Open, because we are getting a little bit of a microstructure we can potentially use in favor of that. Now, again, anytime you've had big moves, right, and you've got these massive 2, 3, 4,000 pip candles, your data will always look a little bit dodgy, right? From the perspective of your chart is trying to include that piece of information. Even if you zoom in on 1 minute, we can't get rid of that, that NFP candle. So charts are going to look a little bit dodgy, just making price action a little bit harder overall to map out and manage. But I think we can deal with this, right? So in essence, for the New York Stock Exchange Open, the strategy that we're going to be deploying is we're looking for a break-in structure. If we break down, we'll look for those sells. My buy order stops are just below market structure at this point in time. From a pending order perspective, I'm currently running in the region of 7,000 to 8,000 point trailings at this point. So if it pushes up, it'll continue with my buys. If we push down, I'll get out of those trades. So ideally, from a sell perspective, I wouldn't trust the New York Stock Exchange initial movements, right? And as you guys know, New York Stock Exchange, that initial push out of the market in either direction is in most cases the general trajectory markets want to go. The difference is how much noise is in that initial push. So if we see an initial buy side move, we want to make sure that market doesn't reverse past the point of New York Stock Exchange, because from a Fibonacci level, that will go past the 88.2, and it means that bull push is dead. We are going to then enter into a bear territory. So when there's obviously a bunch of noise in the market, it just means that those pushes can't be as clear. And again, looking at past NFP related data points, specifically that 2nd of October or September, I'm not 100% sure, we can see New York Stock Exchange created a whipsaw, which depending what time frame you're looking at, that looks like an engulfing candle, right? You get a massive bear candle followed by a massive bull candle. It engulfs that first move, and then markets continue in the direction that they wish, topside or downside. So we are going to look at that break and where that ends up happening. For this, we are going to switch to having a look at all three markets at the same time. So we're going to obviously keep an eye on NASDAQ. NASDAQ had a very, very similar, almost exact move that we obviously saw just develop on US 30. Zoomed in, it looks very, very similar. So there is the NAS that's on a 5, there we go, on 1 minute. So you can see very, very similar characteristics. We've got Dow Jones US 30 on the left-hand side, NASDAQ dead center. My preference is just on Dow Jones because the pip count is higher. So if we look at Dow Jones right over here, we can see that NFP push was 2,700 pips, where on US 30 it was only 1,400. So sometimes up to double the pip value. And NASDAQ might serve for you as a safer vehicle because those pip counts are smaller. But obviously, if the risk is smaller, the reward is smaller too. So again, it's just going to be on your personal preference. Let's have a look at German 30 in terms of what structure developed there. Pretty much the exact same structure. Okay, so all indices, right, are moving exactly the same. And what that tells us, right, and this is a question I often get, if the dollar is moving this or that, which one is responsible? We can see that all three markets are in almost ideal symmetry. And that means the dollar is the pure driving factor of this particular setup here, right? Fox is saying bullish on NAS with a question mark. I don't know if that is a question or are we bullish on NAS? No, we're waiting for the New York Stock Exchange to open. The New York Stock Exchange will reveal what the NYSE Open has from a volume perspective. Remember, the New York Stock Exchange is one of the highest volume exchanges in the world. And New York Stock Exchange has got different times, but in essence, there's a pre-market, main market, and post-market time. Now, main market is where most of the orders flow in. And that's why we see that extreme volatility, because all orders that are queued end up getting executed through the New York Stock Exchange in terms of just simple Forex, CFD trading volumes, but also futures markets also traded through that exchange as well. So all those orders that are pre-set up to go live on the New York Stock Exchange get executed at 3:30 in the afternoons. Remember, from next week, from the 7th, daylight savings time shifts on the US, meaning your US Open moves from 2 o'clock to 3 o'clock. So our dollars for lunch sessions are going to be insane from next week, meaning we're going to start just before US Open. So we'll start at 2:45. We'll trade US Open at 3 o'clock. We'll trade the New York Stock Exchange at 3:30, and we will try and wrap up around about 4 o'clock. So those sessions are going to move to be about 45 minutes trading sessions. And we're going to see a lot more opportunities and volatility in there. So I don't know if that answers that question. Right click on the green order line and then you can select it there. Oh, I don't know if that was the question earlier. How do they access a pending order? It might have been. If that was correct, if that was what the question was, then Colin is 100% correct. You right click on your order, then there's a trailing stop available to you. You can go custom. Just remember, this is in points, right? So every 100 points is 10 pips. Every 1,000 points is 100 pips. 10,000 points is 1,000 pips. So again, in this particular case, right, I'm running on this trade, I'm running an 8,000 points trailing stop, 9,000, so that will mean 900 pips. So as this market's moving, you can see it's dragging my stop loss with it. So we're getting an early move on this market before the market opens. And again, that might be an indication that the markets are aware of something we are not, but also just from a microstructure perspective, I just want you to take into account this can be a retest of the structure. It could be hitting that structure and just retesting that level before breaking down. So I would say, from a order level perspective, where we broke out resistance, that level there will be a good sell entry. And again, anything above this level here, we may then look for buyers. But again, we are looking and waiting for the New York Stock Exchange to officially open. That is opening at 3 minutes and 25 seconds from now. So we do want to wait for that. Any moves beforehand can be premature, and we obviously just want to wait for that open before making that next move in the markets. So that is how we are going to deal with that. Let's just quickly give a look at gold and what gold is up to. Okay, so this is incredible, right? So we've been waiting for gold to get through this diagonal resistance for quite a bit of time. Should the New York Stock Exchange open stick, meaning should we get that positive reinforcement on that weaker dollar for the New York Stock Exchange on indices, that'll be a really good sign for gold to start making those recoveries back towards that $1,690 to an ounce of gold, right? We know that gold's been in this massive bear territory for quite a bit of time, and this weaker dollar, this unexpected, higher than expected unemployment rate number could be enough to start driving the change and potentially giving Powell what he needs from a ammunition perspective. Just bear in mind, the previous federal interest rate prior to the one we just had, Powell indicated that they need to get unemployment closer to that 4.2, 4.4% mark, right? So we're currently sitting at that 3.7. There's still quite a bit of unemployment still to come to wrangle that US economy back into submission and obviously stop these inflationary sort of numbers that are coming in. Okay, so this is obviously gold. This is not US 30. So that is something we do want to watch out for. So if New York Stock Exchange sticks, I will be looking for long positions on gold, but I'm not looking for anything long under this particular zone. So my buy entry area for gold, my resistance area for gold is sitting at 1,690. Right, that's 1,690 is a massive support that gold has held up over this little bit of a sideways market. We need to get above that. If we aren't above that, we're still in bear territory. We know that gold has had, held out very well during recessionary periods. We know there's quite a big recession coming, right? To the US, the ripple effect will obviously come into South Africa. 4 to 6 months from now, as we've covered in articles earlier in the week. So that 1,690 range is definitely where I want to be watching from a breakout perspective. And more than likely, we will see market moves today, but more than likely we will wait for stabilization of markets on a Monday to then look at those opportunities on commodities across the board, just to allow for this initial volatility to play out, and then obviously see where that volatility is going to end up. Okay, so we are about 50 seconds away from New York Stock Exchange open, and we do want to just look at where this market's going to move. I've got some buy orders already. I may pop in an extra one with you guys if you guys are also going to be looking at a long here, but certainly the build up of where this direction is certainly tells us the story of price at this point in time is that the markets are putting a lot more weighting on that unemployment rate than they are putting on those new jobs being created. Again, another sign could be that the markets are understanding that that unemployment rate rising is close in line with Powell's expectations, and it's bringing this labor market into submission, right? He says it was in balance, where, you know, there's just too many jobs for those people who want to, you know, obviously work in those positions. So seeing that unemployment rate rises in line with what he wants. And so maybe markets are clinging on to that and saying, you know, surely if Powell sees this new data, or the Federal Reserve analyzes this new data, that might be enough for them to start curbing these interest rates and stop smacking the market with a 75 basis point hike, or even a full 100 basis point hike. So New York Stock Exchange in the next couple seconds should tell us that story, and we're going to wait to see what that story ends up telling us. So markets are a little bit stale at this point, right? We're looking at that 1 minute time frame. We are observing that candle. Let's see what we can pull out of this. So again, we're just looking, if we get a break on the 32,374, 375 mark, we will start with that rally. But a break in structure to the downside, we would want to break this key support prior to the breakout here. So we want to break 32,288, 32288, and then we'll look for that sell. But anywhere in this zone, we're not going to touch it. We're not going to do anything. We're just waiting for that first candle to tell us what it wants to do, and then we'll start to chase it. I'll just literally pull some of those stops closer to entries there. If it goes down, it'll take me out on a profit. I'm more than happy with that. And then should we go past that support, we could start that sell-off or that correction. And then we're into one big range for the day. Quite a lot of variance, quite a lot of volatility, and we'll see how we end up dealing with that. The markets look like they want to sell. They're not giving us an indication as yet. But really failing to make any substantial move there. But again, we can start to see some big spikes and big moves. So what I'll do now is I'm going to potentially start looking at a hedged position, and that means I may end up placing a sell. Because I've already got buys in place, and then, you know, if this market reverses and that sell continues, my sell will start making money. It'll close out my buys at a profit, and if that sell reverses and it starts for a buy, my buys will cover the profit that I lose on my sell. So when you're in a state of indecision, you got buys nice and early into a bull structure. A hedge will get you a nice early entry without all of the risk that's associated with guessing at the top of the market. So we're just waiting now. We're definitely getting that momentum to the downside. So yeah, I think markets may end up starting that sell-off process. So I'm going to pop in a hedge here for a sell. I'm going to close up some of those buys, and we're just literally going to allow this market to move and do what it wants to do here. So my stops are safe. There we go. So my stops are safe above entry, which is great. My sells stop loss are above the market high. So either way in this direction, either way in this market structure, because my entries are early enough, no matter which way this market goes, I'll be able to capitalize on these moves. All right, so should we break the high of the New York Stock Exchange open, or this little pre-open mark, we'll jump into some buys there. And if we break past, let's say this 3228, what did we say, 32282 mark, then we'll jump into those sells. So we're just going to wait for the markets to give us a direction here. Okay, we are about, let's see, we have a couple minutes in, about 4 minutes in. We don't have a clear break decision here. And again, because of the volatility in the market, the New York Stock Exchange can start a range, but I'm really not looking to be caught out in a range for this session. So should we pop through 32373, we'll layer on those buys and break down below that point. Anything in this range is dead. I'm not looking at trading anything in this range. Let's see, the Luke has got a freeze on his side. Luke, why don't you pop us your MT4 number? Pop it to me on Telegram. If anyone's having freezes on MT4, just give me your MT4 number and we will get it. We'll send it through to the team to investigate. We have sent through a ton of MT4 numbers. I know the team is currently looking at that. So we'll just ask them for an update. Let's wait and see it out. Chris H asking about trailing stops. Please, can we have a session on the new ones? Yeah, so trailing stops are fully a part of the new academy. It goes into quite a lot of detail, measuring a market structure, measuring market range, average volatility for the day. So you understand, what that average true range is for the market that you can utilize. I don't really use the ATR indicator. Let's just see here. It's an oscillating indicator, average true range. So average true range will generally give you, how much volume is in a market, and it will help you with assisting for how volatile that stop needs to be, or at least a trailing stop at least. Let's, where's my average true range? So we'll go over this in quite a bit of detail. But the average true range will kind of tell you how volatile a market is, and how much of your stop you need to prepare for. Right? So when volumes are low, very small trailings, but again, it will kind of peak at those key times, right? New York Stock Exchange open, your US open, US close. Your ATR will generally peak there. That's why I know which times the market's open and close, so I'm not too worried about guessing those directions. Yeah, we will go into that quite a bit of detail. Okay, let's see. We might make a buy push here. Volume is looking pretty low to the top side, but yes, should we crack any sort of structure here, we crack a buy or crack a sell, it's going to move quite fast because we got a whole bunch of pent-up frustration from the market here, and I can see that. We've got those attempted pushes to the downside, a slow build to the top side, and then again another big attempt to that top side. So markets look fairly frustrated in this level, so it could be very likely we could start to see some of those some sort of big breakout, big volume move here. Let's see. Oh, the other nice thing about a trailing stop is it won't activate unless price passes your entry point of your order. So it won't just drag price. If you're in a negative, it won't drag price and take you out in a negative. It will only drag price once it passes your order, your entry. Yeah, trailing stops, when you start to use trailing stops, the your profitability goes through the roof, right? It's just, you know, from a human perspective, to physically move your stop losses all the time is not ideal. You want to figure out what the range is, you know, how big of a swing a market has, and then start to really work on that art of understanding the depth of the market and then putting your trailings accordingly. You guys know that I generally start with a very, very small trailing stop, and if markets then move correctly, I'll increase that trailing stop, giving my trade room to breathe. Let's see here. Vishkan's asking, can you use trailing stops on MT4? Yeah, I'm currently using MT4. Yeah, so my system, sell with 200 trailing stops. Right now, 3 positions in sell with 2,000 point trailing stops. Yeah. Yeah, MetaTrade in general with mobile is not ideal. Like, it's just not a great experience. Chris H took some profit, well done. Chris, so I think in this range, we're not going to see a lot. I think we're waiting for this big push, whether we're going to see a push to the downside, push to the top side. USD is certainly in some sort of range here. And again, this looks small, right? Because of what we've just seen with NFP. But I mean, you have to consider these are 600-700 pip candles, right? 700 pip ranges. So, you know, it's what most people aim for in a trading week completely. Okay, so I think we're going to move into a sell territory on US 30. That candle was substantially bigger than all the rest of them. So my trailing stop should start to kick in, and my, let's see there. Yeah, so we are moving into that sell territory. I've activated my sells. I'm going to close up some of these buys. Okay, and now we could end up seeing, you know, a little bit of a pullback. It is possible. Oh, that was very close to my trailer. Jeez, that was way too close for comfort. We can see a little bit of a push here. But it definitely looks like the trend for the US New York Stock Exchange is definitely bearish, right? So we want to stick with that. I think from a resistance perspective, we are going to get some sort of level like that. There we go. So have I been waffling off this whole time without any sound? That's madness. Okay, let's see. Okay, beautiful stuff. Anyways, I assume you guys have seen what's busy happening, regardless of us speaking or not. That was the important part. Okay, good stuff. So anyway, I was talking about where we could end up going to. I just want to point out from a price action structure perspective, that little bear push we just got did come down to price action, right? So at this point here, as we get to, let's see, this range here, you may want to consider taking profits, 32182 in this range, for the reason being that if we bounce off support once again, right, and we start that trend to the top side, you might want to get out of that trade. But in any event, so running trailing stops at this point of about 7,000 to 8,000, and that'll mean that regardless of the position, even if markets return back into entry territory, yeah, we're good to go. Sorry, when trading, I don't really look at the chats, guys. Absolutely. Did we smash the over the 100 likes? There we go. If you guys haven't liked already, apologies for the sound. Haven't liked already, just go ahead and smash a big old let's go, because that's what it's all about. But if you are going to sell, get a let's go, let me know in the comments. You are sell with me, and if you are, then just a massive well done. The Academy starter, we're updating as we speak, so it's just a matter of launching. We are including the new trading platform in there. Obviously, we're doing some bug tests at the moment, and we are releasing 3 variations of the Academy. So beginners, how to set up your accounts, how to do navigationals on MT4. We're going to be setting up Premium Plus. There's going to be beginners, Premium, Premium Plus, and then it's going to be black edition, or we're going to have private wealth, right? We're going to have a private wealth that is for $50,000 and above, but we're busy creating these different structures to create value propositions. So we're busy finalizing that. And if you guys are in profit on your trades right there, go ahead and celebrate with me. Go and pop in a massive let's go. Yeah. TP for US30, I just explained Pepsi that you might want to take profit at the zone right here because we are at support. So first take profit, right, is currently sitting at 1,200 pips. Maybe close up one of your positions. I'll close up one of my trades, maybe. Let me close up one there. And then we just have trailing stops to manage our risk. The trailing stop at the moment from my side is 8,000 points. It's dragging my position past entry. So regardless of which way the markets go now, I'm now a passive investor on indice markets, right? Which is an amazing place to be. Specifically after a little bit of a wonky NFP or the whipsaw, always very, very difficult to trade that kind of price action. But we almost are at NFP open levels, right? So we just need to make it a little bit further. And if we get to those NFP open levels, right, that might be overwhelming for the market. We could see that continued sell off back into that massive, massive bear territory. Yeah, very, very big candles for the day. It just makes the charts look a little bit distorted, but we are continuing that sell. We're currently running 1,500 pips in profit now. Nice, smooth trade. Not as volatile as NFP, but this is what we generally do in Dollars for Lunch, right? So this is nothing new. It's just what we do on a daily basis. It's what it's all about. Chris H, yeah, absolutely. If you're part of us, part of the Federal Reserve interest rate decision, that was massive. That was extremely fun. If you were in any of the other sessions, extremely fun. But yeah, we've had an absolutely amazing week. And the goal is, obviously making money is great, right? Most days we close out making money across the board. But if you learn something during the process, if you're able to see how we deal with extremely difficult markets, that's essentially what they don't teach in all of these academies, right? You'll pay for a course by some guru, you'll get a PDF or some rubbish, and that's great. But then you've got to trade the real markets. You've got to see these moves, and what they said in the textbook is not what's happening on the charts, right? And I think most of you can agree that's what ends up happening. So that's the beauty of live broadcast, live TV, is that these things are happening live. If I make a mistake, it happens live. And you can't fake that. You can't smoke and mirrors that, right? There's a lot of traders out there that'll have two different groups. They'll have one group, they send everybody a buy order. One group, everybody sends them a sell order. And then the ones that made money, they put them on Instagram, right? That's how they build that market. Ozo Fox says made $230 in NFP. Beautiful stuff. If you caught those trailing stops, I got a lot of inboxes. I haven't yet read all my Telegram messages, but I can see a ton of people put in there that they made profit with those trailing stops. That was definitely the way to go today. Extremely high risk, high volatility. That's the nature of the game. That's what it's all about. But ultimately, we're on a great sell. Markets are moving beautifully. We're at that 500 period smoothened moving average SMA. So if we break that, we're almost at pre-NFP levels, right? So nice big range, yes. But as long as we're catching one direction in that range, we're currently trading and running at this point in time about 1,700 pips in profit. So again, if you were trading at a volume that allowed you $1 per pip, it's $1,700. You could do a lot of things with those money, a lot of things with that money, right? So that's what it's all about. Okay, guys, so it's been a crazy, crazy day. We're in money. We've made some money. Super excited to obviously be being a powerful session. That's what it's all about. Next week, we're changing substantially. You're going to see a lot of new things in terms of the shows, in terms of the different segments. We're going to start segmenting our free editions, our premium editions, and our premium plus editions to give those of you who need a little bit more attention with slightly larger accounts, a little bit more of that personalized feel, while still offering our free sessions to the public to just change the space of the Forex industry right now. So just a massive shout out to the whole Globex 360 team, to every single one of our clients, for every single person that has been part of the trades and the broadcast this week. Just a massive, massive thank you. We've had a really, really good week. NFP, not particularly the way that I like to see it. Conflicting data, unfortunately, as I warned, those whipsaws are definitely something to be careful of. But nice recovery in terms of the New York Stock Exchange open. So that is where we're going to wrap up the week. I will see you guys in the new week. We're going to start off with pounds for breakfast. That is going to happen at 10:15. We're going to trade the London market open. We're going to look at the effects of what NFP and New York Stock Exchange Open has had on the markets, which will set the tone for this week, right? So you definitely don't want to miss that out. If you haven't already, smash that subscribe button. Every time we go live for a public broadcast, you are the first one to be notified. Other than that, if you are part of the Telegram group down below, I generally communicate all of the show times so that you never miss a single one. So guys, absolutely Laluma saying liable, advice Ben, Mercy, Talaka Musa, Tando, and Mercy here, guys. You are absolutely amazing. What I do in the live TV is just a simple result of all the hard work that you guys end up doing on that side of the world. Clients love you, the team loves you. Just a massive thank you to every single one of you who makes this possible. And obviously to you guys that invested your time in being with us. Okay, guys, listen, absolutely thank you for a powerful week. I will see you guys in the next week. I'm resting this weekend for the first time in a long time, putting my feet up, spending some time with my beautiful wife-to-be. Have an amazing weekend to every single one of you. Remember to live, trade the Globex 360 way, and I will see you guys in the new week. Bye.